Do you wish that all things wealth and finance were much easier to understand and not presented by a bunch of beige cardigan-wearing geeks? Welcome to the Clever Investor Podcast, where we're dishing up the easiest to understand finance program served in bite-sized chunks, so your brain will thank you as your knowledge grows. Hosted by the brilliant Owen Taylor, a multiple award-winning expert with a glorious knack for explaining the complex world of wealth in the simplest of ways.
Hey, Clever Investors, and welcome to another show. With around 97 banking companies that offer us hundreds and hundreds of different mortgage products, it's no wonder it's going to make you absolutely dizzy trying to find the ideal solution that's going to fit all of your needs for now and into the near future. Every day, these lenders have marketing departments that swing into action and start bombarding your poor brains with incentives. And it's anything from these really low advertised mortgage rates to seemingly huge discounts, or the current trend that pops up, cashback offers, enticing you to get cash back for starting a new mortgage or for refinancing the current debts that you have. Now, with so much happening, it's natural to feel stressed out and very confused. The fact is, when many of us Australians try and navigate the mortgage maze, we make too many errors. So here's my top 5 common mortgage mistakes. Number 1, research. Now, savvy choices are made by researching different lenders and different lender options and all of their loan types, the range of features available, and whether it's applicable for your own situation. Plus, there is knowing what documents you will need to apply for the loan, and there is a bit of a backlog at the moment, so we want to make sure that all of that paperwork is together at the very beginning, and make sure when your application does get picked up, it goes through as smooth as possible. Now, to do all of this analysis effectively, you basically need to be qualified in finance. But the great thing, as I've talked about before, is you don't need to hold those qualifications, because that's why we have mortgage brokers roaming this great earth. They're going to do all of the hard work, get all the paperwork together, and really, the good ones out there are not going to submit your application until it is 100% tickety-boo and all in order, so there isn't going to be these delays and frustrations later on. Number 2, not making a budget. Now, this sounds super simple, but how are you going to know if you can actually stick to a budget once you've actually got the mortgage if you don't have a budget to start with? A budget helps you monitor spending, and it will determine the mortgage repayments you can service and comfortably service with still having a life. A good budget will help you when it comes the time to actually apply for that loan with the bank. Now, banks love borrowers who can show they have genuine savings, and we've talked about this in previous episodes, because that on the backside means that they're also going to be able to afford the repayments. There was a previous show that we did on the struggle to actually save a deposit. You might want to flick back through wherever you get your podcast and have a look at the real struggle to save a deposit. Number 3, know your numbers. Getting yourself ready for a loan pre-approval, which generally is going to last 3 to 6 months. Now, this is providing assurance to you that you can actually get those funds before you go property hunting. It is such a terrible feeling to have your heart broken when you find the property of your dreams and then realize you can't actually get the money together. And it could also be expensive. You could potentially lose your deposit. Now, pre-approvals also are not only helpful, but I think vitally important if you're going to go to an auction to look for the home of your dreams, your owner-occupied property. Do not ever go to an auction without your pre-approval in your back pocket. Number 4, getting sucked into honeymoon rates. So many people fail to look past the honeymoon rate, which is an introductory rate. It could be for 6 months, 12 months. Some of them are even up to 24 months. Now, this is when the interest rate on the mortgage is lower than it will be for the remaining part of the loan. And sometimes there's a little bit of a penalty if you try and get out of it within a certain period of time. If it hasn't been budgeted for, you could be in for a shock at the end of the honeymoon period. If you do take up a loan with an intro rate, a bit of a smart move is to prepare yourself for these higher repayments once the honeymoon period does actually end. That way you're prepared and there's not going to be any surprises. Number 5, paying for the bells and whistles you just don't need. Have you ever sat at a Sunday afternoon barbecue and that friend of a friend tells you all about the home loan features you absolutely must have? Well, as we've talked about before, you're certainly not alone there. A lot of borrowers will choose a mortgage because of the features it boasts and because its marketing campaign has then convinced them that these features are an absolute must-have. Now, most of the time, these additional mortgage features will come at an additional cost, either with a higher mortgage rate or monthly or annual package fees. Just remember, every borrower's situation is different. So what may work well for that friend of a friend is not necessarily going to work for you. So with so much happening, it's natural to feel stressed out and confused. You're not alone. Don't put it off. Do not stick this in the too hard basket. You have a team of people out there in the world that want to help you. Sit down with your beautiful mortgage broker as early as you can and get as much done as you can early on. I'll see you again next week for another edition of the Clever Investor Podcast.
You have been listening to the Clever Investor Podcast, proudly sponsored this week by Blue Wealth Property. Are you ready to start a new investment journey? Get in touch with the industry leaders, Blue Wealth Property. Blue Wealth have a proven track record in using research to identify growth markets, and Blue Wealth have supported thousands of Australians to buy the right property in the right market at the right time. Go to bluewealth.com.au.